To Q4FY22 and Business Update Conference Call of Mishra Dhatu Nigam Limited, hosted by ICICI Securities Limited. From the management team, we have with us Dr. Sanjay Kumar Jha, Chairman and Managing Director. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Without further ado, I now hand the conference over to Dr. Sanjay Kumar Jha for his opening remarks. Thank you, and over to you, Dr. Jha.
Good afternoon, and I welcome all the investors and the stakeholders for today's conference. I am very pleased to announce here some of the highlights, which first initially I'll start with Q4 results. Q4 for 21-22, we have sales of 323.29 crores against 345.87 from the previous year. And VOP for this fourth quarter of this 21-22 is at around 352 crores against the previous year of 271. There is a growth of around 30%. Also, we had the PBT, which is 110 crores against 101 crore.53, which we have recorded in the previous year, registering a growth of 8.8%. Similar trend is seen in the PAT also, where our Q4 PAT against 74.62 of the previous year, the quarter 4 of 21-22 stood at 80.99 crores. This year also, if you see the overall for 21-22, I am going to the full year, complete year of 21-22, we have achieved a turnover of 859 crores against the earlier last year turnover of 813 crores, registering a growth of around 5.7%. VOP also, there is an increase of around 28% corresponding to the previous year. So against 771 from the previous year, this year we have achieved 988 crores. And there is a corresponding increase in the PBT also and PAT also. And PBT stood at 239.12 crores against the previous year of 226. And PAT is 176.31 against the previous year of 166.29. So this is the total, the financial performance, what I have put in the briefly here, and our results are already out. It is available for further details. And considering that this year we have paid the dividend of, already interim dividends were paid of rupees 1.56 per equity share. And now we have decided the equity around 1.54 per equity share is the final dividend we are going to pay for 21-22, which is also the highest. In fact, it works out to around 33% of PAT and highest dividend paid by the company so far in its history. So this is all performance. There has been some difficulties, as you are aware. In the last quarter, there is some impact of the current conflict which is going between Ukraine and Russia, and also that has put lot of pressure in some of our raw materials as well as the sales also. So we could not realize certain amount of sales at the last moment due to this war. And initially, the first quarter of the company's performance was also affected by the second wave of pandemic. Third also has slightly, but then it was common for all these companies for this year. Order book position, I just want to highlight here that our order book stands almost similar to that what we had on the 1st April of 2021. It is coming to around 1,317 crores. The reason behind that build-up of the order book is mainly today we are not getting any order which can go for the couple of long term. What we are getting the orders now that we can get the orders and we have to execute within a very short time. This year, another highlight, as I said, about the significant jump in VOP, and also the export has gone almost, it has touched more than 4 times. Of course, base was very less, but nevertheless, export jumping to 4 times, and we have to also see the disruption in the supply chain due to the pandemic entire in the globe. This has been a very significant achievement for the company as far as presence in international market is concerned. I would like to highlight some of the other achievements. Our facility which has come at Rohtak in Haryana, which is exclusively for the armor facility, that facility has already been established, and we are starting the facility. Already we have the booking of more than 100 crores of orders for this facility. So we have starting this facility with a very good note. We also started our white plate mill, which was coming from since long time in this 21-22. And we have got established the entire product range, which includes low alloy steel, stainless steel, titanium alloys, super alloys, armor steel, varieties of products already we have demonstrated, and it is expected that, and it is already we are getting orders from a different source, which includes a token of export also we are trying to get from this facility. This year also we have seen that our 8-ton vacuum induction melting, which has been a long requirement to enhance our capacity in manufacturing of special steel and superalloys, have been already commissioned, and it has been proven that this equipment can be used successfully, and you will find that the contribution of this facility in the current financial year. We have also started a very important facility for making titanium alloys. Already we have, but to enhance its capacity, we are making a titanium shop. Just I'll take a small break. So our titanium facility, now we are putting exclusively for making titanium production in single place, which will meet the requirement of the international companies or the aerospace companies, precisely aerospace companies, and so that our product can be used in the moving parts of aero engine components. So these are some of the highlights which I have presented. Now, floor is open for discussion and any the queries. And with me, Director of Finance is also joined. So you can put your questions now. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Sheikh Jalani, individual investor. Please go ahead. The line for the participant dropped. We move on to the next participant. The next question is from the line of Kavitav Shah from White Equity Investment Advisors. Please go ahead.
Hi, sir. Thanks for the opportunity. So I have 2 questions. The first question is relating to the inventory. So we have the sub-line item is called internally generated scrap and rejected material. So if you see over the past 5 years, that portion as a percentage of inventory is increasing consistently. Over in 16, it was around 17 crore and the percentage of inventories was around 6%. That has increased to 217 crore and 27% of inventory for the FY 2021. So can you please throw some light on this, why this balance is increasing? And is company planning to use this material for some future project? Can you please throw some light on this?
You have rightly told that whether the company is trying to use this inventory. First of all, our company, we are manufacturing very special alloys and special materials. Now, these materials, whatever we generate the scrap during the process, it cannot be sent outside and sold outside. And basically, they are very valuable in nature. And our orders are not having uniformity. We cannot get the same order on regular basis. So whatever we generate, probably we have to store for some time. And then when the next order is coming, I will be utilizing those things. So this is the reason precisely that it is going up. But at the same time, certain things are also not moving very fast because items which we make the certain scraps, you cannot sell in the open market. Even though you are not able to use it for a long time, you cannot sell in the open market because these materials are very strategic in nature. So these 2 factors are, I think, the important. Any other part is there, I will ask our Director of Finance to add here.
Okay, sir. So just adding on that, so if the balances are increasing, so any plan to return up in the near future of this inventories?
Yeah, we have. If you see our this consumption of internal scrap, I do not know if it is appearing in our financial results or not, but our consumption of internal scrap has increased progressively year after year. It is mainly because we are trying to see that the scrap can be used for certain customers who are not monitoring. That means their requirement is not for using the pure metals. So we are making the balance on that. And also we have modified in our processing technology, which has helped us to consume more and more quantity of scrap. So that work is also parallelly going on, and that encouraging results are coming. The last year itself, this current year, we have saved around 43 crores of raw material by utilizing our internal generated scrap.
Okay. And sir, second was just a small questions. So you are providing the count of the employees. So can I get a count of how many are in the admin staff and how many are in the technical staff? So if you can give some idea on that for the current year and over the trend over the last 5 years.
Okay, I think you are looking for the numbers in technical and non-technical side.
Yes.
We'll provide you that information.
But production and technical side only more people are there because this company is a quality-oriented company and more testing environment inspections are required. So we have a big bunch of quality control people. So comparatively, compared to admin, production side is more, including our old equipment maintenance team also.
Okay. And the trend is seen for the last 5 years, right?
Yeah, trend is similar.
Same.
Trend is similar. Trend is no change.
Okay, thanks a lot.
Working in the operation.
Okay, sir, thanks.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Aditya from SIMBL. Please go ahead.
Yeah, sir. Hi, sir. Thanks for the opportunity.
Aditya, sorry, your voice is coming a little feeble.
Hello.
Sure.
Am I audible now?
So there's a lot of echo from the background.
Is it better now?
Yes, sir, slightly better.
Yeah. So just wanted to understand, we have been targeting exports growth for the last 2 years. So just wanted to understand which countries are we targeting and what kind of products are we looking to export?
Export, the country which we are targeting, there are almost, don't have the list as readily available here, but I will tell you, we are targeting Germany, we are giving to Turkey, we are giving to some Bahrain also, France also we have given, we have also supplied to US also, UK also, and we have also making the deemed export. So there are various sectors where we are giving our export is going on. And I will tell you, it's basically the beginning. Because in the international market, since we are entering the first time, our products are being tested for quality, for processing, for certification. And that's why the volumes are now increasing year by year, because once a customer is satisfied that one grade is successful, they are increasing the quantity, provided the price are given on competitive basis. So these things are happening now, and I am sure that, in fact, if you see our targets from the ministry, that I have to take it further from 87 crores for this year, we have to go to more than 350 crores in next 2 years, next 2 to 3 years. So what I say that there is a lot of emphasis from the ministry also, and we are working towards that.
And so just wanted to understand which are the products and sectors we are targeting?
Products are in the mixed category. First, I will say we are giving the titanium alloys. We are also making the special steels. We are also giving the super alloys. So all major these 3 areas we are targeting. Whatever is our product portfolio, we are serving that.
Right. So unlike India, where in many of the products you are the market leaders, but when we go to international markets, the competition will be higher. So just wanted to understand what gives us the confidence to improve our export share in our revenue.
Confidence comes from your quality and then what is the price. These 2 aspects are very important. So in the international market, the price is the first thing, and then next comes the quality. Unless those 2 things we are not made, and for me the main part I will say the quality is very, very important. Price wise, we are not finding much difficulty in the sectors which I have told you. But of course the margin is less, because initially once you have to establish in the market, you have to be slightly cheaper compared to the established player. So to penetrate the market, initially we have taken a conscious decision, and by the board that we will operate with a very less margin. So with the less margin and with the better quality we are operating, but as we are progressing, some places we are getting good margin profit also.
Right. And in previous calls, you had mentioned about NADCAT certification for aerospace international companies. So where are we? What is the status for that?
NADCAT is on the advanced stage of approval. We are expecting by in next 6 months, we are expecting that we'll be getting that.
So what kind of opportunity will it open for Midhani?
See, NADCAT is the one area. If the NADCAT certification is there, you can enter in the international market for aerospace industry. Because for the aerospace industry, unless a NADCAT certified company you cannot get the orders. So the main objective of getting NADCAT is for that purpose. And considering that NADCAT certification not only in the national market, even in the domestic industry also, the foreign OEMs, right now they are buying material from the outside and then manufacturing the product in India. They will also certify you, and you can be a supply chain partner for their industry also.
Right. And in terms of our raw material, how much of it is imported, and what would you say it was 3 to 4 years back?
See, today the raw material which we are discussing mainly required from Midhani are imported only. Very less Indianization is there in the country. So far, during this period, we have taken effort to Indianize a highly voluminous requirement of pure iron. We have Indianized in our company with the support of our R&D, and we are consuming that. But the resources of the nickel, cobalt, moly, it is not available in our country. So that's why we have to depend totally on import. So wherever it is possible, we are Indianizing, and then see that similar is the case for titanium sponge also.
Right. So are we dependent on any 1 or 2 countries for our supply of raw material?
Yeah, definitely.
Huh? Sorry, I did not get it. Hello?
Yeah, we are depending on that.
No, what my question is, are we dependent on only 1 or 2 countries for a supply of raw materials, or is it diversified?
No, I am just trying to affirm. I am telling that whatever you have raised the question, its answer is yes.
Right, okay.
Thank you very much. The next question is from the line of Abhijit Mitra from ICICI Securities. Please go ahead.
Yeah, hi. I hope I'm audible.
Yes, sir, you are.
Yeah.
Yeah, so I have 4-5 questions. First of all, if you can lay down the capex that's scheduled for white plate mill, armor plant, spring plant, and the powder plant. If you just tell me the capex numbers for each of these plants, the total capex that you're scheduled to do.
Already for white plate mill, our capex expenditure is completed now, and our capex was around, if I remember correctly, around 500 crores. And for armor also, our capex already we have completed more or less. Very little part is left now. So there almost around 60 crores we have spent. And third area you have asked about? Spring plant.
Yeah.
The spring plant also our capex expenditure is coming to the end now. Hardly 10% is left. But there we had almost placed around 30 crores. 30 crores. And you said about powder, no?
Powder, yeah.
For powder, we have not spent so far. Already it is in the stage of now tendering, and we had estimates of around 35 to 40 crores.
35 to 40 crores. Okay.
Yeah.
Sir, can you lay down your estimate of the maximum revenue that's possible from this plant, starting from the plate mill?
Yeah. Plate mill maximum revenue what we can get to the full of its capacity is around 500 crores.
It depends on the product mix. If I do more special steels and my own product slabs, and my revenue will go up, because today I am outsourcing for the plate mill. Whatever plates is to be rolled, I am getting outside. Now whatever I am getting outside, I will roll only inside. That itself will save me nearly 60 crores. And further, if I roll titanium and other things where the prices are more, I will get more revenue. If I go for a commercial steel like what I supply to railways or stainless steel, then my value will be less, even margins also will be less.
I'll just tell you one example. Recently, while interacting with Airbus, they said that if India can supply titanium, because they have problem now today with the Russian supply chain. And in the international market, for titanium supply, Russia is to play a very vital role. They have the huge capacity and all. So if we can fill up the gap, we can get a very good potential of the market. So we are trying for that, basically. So what our Director of Finance has told, adding to that, if you are going for special materials, special alloys, naturally with the less volume, we can go for higher turnover. And our main purpose, target is for that only. Our team is working towards that. And we have some small progress also we have made. And we'll be updating you as and when we'll get the good amount of orders.
So the maximum revenue you feel from this mill is around 500 crores, that's what you said?
Yeah. No, today I am assessing that, but it may change. It may go to higher also.
Have you booked anything in 22?
Yeah, we have booked some orders around, I think, around 5 crores worth of order. But it is a small beginning only, I will say. 5 crores worth of order we have booked.
Because their margins are very thin. There were a lot of competition is there. If you take commercial steel, carbon steel or stainless steel, margins are very thin and a lot of competition is there. And this project also, wide plate mill is kept with the funding by the government agencies as a strategic in nature. Their material, MDM, some material, armor steel and all to roll that this plant is planned. So this is additional. The plant capacity also 30,000 tons. In the 30,000 tons, only 5,000 to 6,000 tons only this main special steels and important titanium will come. Balance 25,000. Now I have to see how to utilize the market at a very competitive market. And another important thing is the wide plate mill. In the wall itself it is there wide. The wide plate mill I can roll up to 3 meters width, which is not available in most of the places. It is unique. So I'm trying to capture the market and the customers also. If we are able to capture and the customers' confidence I get some orders with some additional premium also. Say normal steel 2 meters width, if it is going at 250 or 260, I may get another 20 rupees more for this wider plate.
Okay. And any revenues that you have thought of in 23, 24, 25 from this project?
Yeah. Revenue we have thought of. We are planning to have more and more addition. In fact, armor steel I am for my own requirement of armor plant. I am already manufacturing and giving to that. So it is not that only I am giving the product directly from the mill. We are also doing the value addition so that our turnover will go up. And also we are taking up some of the requirements of
from a wider plate perspective, can we expect 50 crores, 100 crores of gradual revenues in the next 2 to 3 years? Is that possible?
Easily. That is not. We are targeting much higher than that. We are targeting at least 250 to 300 crores this year.
Oh, FY23 itself? Oh, okay.
Yeah.
Okay. That's comforting to know. And sir, what about the armor plant? What is the maximum potential revenue that you feel possible from the armor plant?
Armor, this year we have the order book of 100 crores. I am expecting that not less than 60 to 70 crores will be having this year.
Okay. And what about spring plant, sir?
Spring is the only where we are depending exclusively on the one customer, that is railway. And railway certification is now on the way. And after that, I have to look for the orders. And we are ready now in all aspects. That work is going on. So I'll be coming to you, investors, whenever I get a good breakthrough in that side. But there also I say that once our work starts moving, we'll have a continuous inflow of the order.
Not only railways, we are seeing other orders also, where other people also, wherever springs are used, those orders also, those customers also we are trying.
But what is your expectation of the maximum revenue possible from this plant, from this spring plant?
This plant can give revenue of not less than 25 to 30 crores per annum.
Okay.
So let us see that how much we can get this year. That's a challenge. We are trying to regularly working on that.
Okay. And what about the powder plant, sir? What is the maximum revenue possible from the powder plant?
Powder is basically, I'll tell you, not as a project, it is R&D. In fact, we have started with the R&D type of activities, and that will require some time to establish for our product in the market. Because normally the powder producers across the world, they are certified by certain companies, additive manufacturing companies. So we have to penetrate that area. So and that work also has to take off. Maybe it will take 1 year, 1.5 years to get the equipment itself. It will take some time. By the time I feel that technology also will mature in the country. Today we talk about additive manufacturing, but the users are also very limited. People are not using the components so easily. But it is progressing now. You can even find that certain now startup, they are making the rocket also using the additive manufacturing technology. So I am hopeful that by the way our product is progressing, by the time our technology is available, we will get very good customer there also. But financial part also has been done for that project. I don't have the exact numbers, but we'll let you know.
Sure. That's all from my side. I'll come back in the queue. Thanks.
Yeah.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Romil Lalit Jain from Electrum Investment Managers. Please go ahead.
Yeah, hello sir. Thanks for the opportunity. You can hear me?
Yeah.
Yes. Sir, my question is on the on the defense side. I think government is very vocal about defense, and a lot of opportunities have come up in the defense space. Okay, right from shipbuilding to army and everything, aerospace and all. So, what kind of rub-off effect do we expect in our business? Because a lot of these alloys and special steels will also be used, in the defense category. So, can you just throw some light on that? Maybe in the next 2, 3, 4 years, where do we see ourselves in terms of revenue, or maybe EBITDA margins and all? Thanks.
First of all, I would like to mention here that yesterday itself, the Defence Acquisition Council has cleared the AON, that acceptance for that is called equipment. So that has been already cleared by DAC, Defence Acquisition Council, and which calls for that investment of around 76,090 crores. Now, there if you see the classification, I would like to draw one area. That area is, they are talking about the indigenization of materials for Sukhoi engines. You know that today in our country, Sukhoi is the main, one of the biggest fleet for our entire means aerospace, Air Force. So for the Sukhoi engine, if they want to start the Indianization, MIdhani has a golden opportunity because many of the alloys which is being used for the Sukhoi application, we have technology to manufacture those alloys. And also we have a very good system in place to get certification for aerospace materials. So considering these two aspects, I see that we have a very good opportunity in the area of aero engine materials, and that is going to rule for future in the country. And not only that, in addition to that, you see for our light combat aircraft also, LCA, which you say we have developed, for that also manufacturing of the engines has to come in the country, today or tomorrow. So once we get this experience for the materials, we can enter in that area also. And there is a huge business coming up for the aerospace materials.
So that is so nice to hear.
It is basically in the engine.
Okay. So, sir, this Sukhoi which you mentioned, just want to understand, the timeline for that. Let's say, of course, not the exact timeline, but, how much time the certification will take when we start this process. And as you mentioned, we have the technology. So do we have the capacity if we get the certification in the next 6 months, 1 year? I don't know how the process works, but by when can we expect some kind of revenue to come from this?
I'll tell you, for Sukhoi materials, MIdhani will not wait for certification. Our material is already certified as far as material is concerned. Only for the components which has to be made for aero engines, there only will require some time for certification. For raw material, we are already certified, and we have time will not be needed for that.
Okay. And so, what kind of opportunity size will that be on this entire aerospace?
Today, our business in aerospace is very less compared to that. In India, I think the activity is less. So I see that future. If you see I'll be seeing that if we are able to get the right quantity of the orders and all, it will be fairly tilted towards the aerospace industry. So it may see that we'll find that 30%, 40% of our revenue may be coming from the aerospace. So I cannot predict that what will be the requirements of the materials as on today, because initially for how many sites they are going to place the material, but it is a good volume, good area.
Okay. So, sir, let's say in the next 4-5 years, where do we see ourselves, because the opportunity size is so huge, overall, and the exports will also increase. So what kind of estimates, we could get from, let's say, next 4-5 years in terms of margins and, the top line?
See, I'll tell you today, you might have seen the Ministry of Defense, they're talking about $5 billion export, $25 billion of production. So that increase itself is coming to 2 times. Whatever we are today, it has to go to doubles. So there is a target that unless you grow at the rate of 20 to 25% per annum, you cannot catch to that level. So wherever you see now the requirements coming from the defense industry, either PSU or private, any industry, and especially I am talking about the PSU, which we are seeing from the close quarters. Definitely we have to grow at the level of not less than 20-25% per annum.
Okay, and the margins will also be healthy, right? I mean,
margin, I cannot tell you because margin is today, whatever we are having, that itself is a very high margin.
Okay.
And in the country today, the lot of competition is coming in the materials also. MIdhani cannot claim that MIdhani is the sole manufacturer of everything in the country today. It was the earlier time. So there will be a pressure on the margin, but then definitely somebody has to improve the efficiency. There is a lot of opportunity in that.
Okay. So, sir, last question from my side. I just want to understand whatever orders, we get, the order book and everything. is it largely tender driven or it is how that process works? Or it is directly given to
Majority of the orders we are getting by the tenders only.
Okay.
We are not getting on nomination. Nomination era is almost over. Very limited orders are coming on nomination where you have exclusive technology we are holding, exclusive patents we are holding, exclusive we have that testing facility and all we are having. There we are finding some orders are coming on a nomination basis, but they are very limited. So majority of the orders we have to be on the competitive basis only.
So the competition is very high. How many such companies would be there who would be competing with us, let's say for a couple of tenders?
I cannot tell you. For every tender is a different type of game.
Okay.
Every tender you may find either one competitor, sometimes with the two competitors, depending on what is the type of grade. And sometimes even the tender is there, we are the only available in the country. So it depends that what is the type of tenders. But today I will say that Midhani's product portfolio is very wide. So we are finding ourselves not so much discomfort in getting the tenders, winning the tenders. But competition is there, definitely.
Thank you. Romal, I'll request to come back in the question queue for a follow-up question. Next question is from the line of Abhijit Mitra from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question, and I hope I am audible.
Yes, sir, you are.
Yeah. So just to sort of continue the previous questions, on the armor plant, what is the maximum potential revenue that you can see, sir, per annum?
Other plant means?
The armor plant.
Armor.
What is the?
Armor has a great potential. The country, we have an estimate. It was not by me. It was given by a consultant. We see that there is a potential of 250 to 300 crores.
3,000 for next 5 years.
3,000 crores is the total volume in the country. But we can see that Midhani can grab 10% also of that. It will be not less than 300 crores.
And the capacity is enough to address that?
No, we are not right now. We are adding further. We are in the process of improving the capacity. Certain supply chain also is the issue because all materials are not available in the country. So we have to depend on the import. So those type of activities are going on. But it has a very big, bright future. Because our industry is increasing. Everybody now is looking for a safety for high standards. So and then you need a lot of improvements in that area. So we are working towards that.
Okay. But as of now, you mentioned that in 23 you are targeting a revenue of 60 to 70 crores.
Yeah, we are starting with a healthy order book position of 100 crores right now. But I am just saying that if I am able to complete 80% also is fine. But I'll be seeing that how I can maximize the revenue by doing more and more.
Okay, but then, white plate mill and armor plant put together itself can add around 300 crore revenue in FY23. Is understanding?
Yeah.
Okay. And that 300 crores can increase up to almost 550 crores in the next couple of years easily.
Definitely.
Got it. And also, if you can give your expectations of order inflow for the next year.
Next year, this current financial year, no?
FY23, yeah, FY23.
Yeah, we have almost a visibility of around 1,200 crores of order. 1,200.
Okay, and what has been the MOU target for
sorry to interrupt, your voice is breaking.
MOU target we have for this year around 1,000 crores.
Okay, that's all from my side. Thank you.
Yeah.
Thank you. The next question is from the line of Shalabh Agarwal from Snowball Capital Investment Advisors. Please go ahead.
Thank you, sir, and many congratulations for a very decent set of numbers. So the first question is, just wanted to get a little more color on how is the profitability getting managed, because we've seen most of the raw material, most of the metals, scaling new highs in terms of prices, whereas we've been able to maintain our margins despite having fixed price orders. So just wanted to get a sense of how we are doing it, and what do we expect for the next year? Do we expect to maintain the profitability or not, given the surge in the prices of raw materials?
Yeah, you have really mentioned this. There is an area of concern for all the metal, especially the special alloys and metals producers in the country, because that there is a lot of volatility in the price of raw materials.
Correct.
So it is also putting the pressure in our profitability, margins and all. We have also faced in the current financial year, the previous financial year, our expenditure has increased because of the increase in the price of raw material, because of the increase in the price of the fuel. So there are a lot of other issues are also there, power cost. So my submission is that this is the part of the industrial hazard. Any industry is going to face. So the margin depends that what is the how much efficiency you are doing in your operation. If your efficiency is improved, you can get the margin. Otherwise, in today's condition, whatever the raw material price is there, very difficult to sustain the profit. Very difficult. We have faced in the last year. Otherwise, we could have got a better financial results.
No, but in this last year itself, our actually gross margins have actually gone up. In FY21, we were at 74%. I'm talking of gross margin. Whereas now we recorded around 78% almost. So despite having fixed orders and the raw material prices going up, our gross margins have actually gone up. So that is what I wanted to understand. How have we been able to manage that?
Here I will answer. The gross margin also depends on the value of production. Because value of production this year, if you see, is 989 crores. Whereas last year it is 770 crores. Even the prices have gone up because I am able to make more production. My fixed cost distribution is it is taken care. And another thing, if you see my balance sheet, even my raw materials also, compared to last year, I have increased by 100 crores. Luckily, due to this present season of this Ukraine war, Russia-Ukraine war and other things, even the prices have increased. I built up some raw material at a pre-war rates. Now I am also facing some problem because of the war increase in prices, where whatever nickel, cobalt I have purchased at a lesser price helped me. So I incurred some additional expenditure, helped me in reduction in my expenditure, and also because of my increase in production, I got margin. That whatever gross margin is there, it is improved.
Okay. So typically, these orders that we have got, and the chairman mentioned that the time duration of the orders have come down. So what is typically the duration now for the orders that we are getting compared to, say, a couple of years back?
Today, if you see the order requirement is such where if I am getting from a customer, let's say I am talking about our new business on the white plate mill. So the white plate mill, the order is there. I have to execute it in 2 months, 10 weeks. They have to supply. So now earlier we used to have the months and sometime in the year also. Now it is coming in within the weeks. So these are the different type of challenges we are facing now, and definitely that is also trying to improving our cycle time has to be reduced. It is good for the company because you invest and you get your cash back, and the cycle time is less. It is good for the company. So that we are doing. So this is the type of orders now is expected. Nobody can wait for the months now for getting the orders. Recently we got the order from the railway. Now the railway order, the moment we have got, it has to supply from the next month. So we have built up the material, it was lying with us. The moment the order has come, we have supplied. So like that, different types of challenges are coming in that execution of the order. Defense projects also now, there is a time bound. Any project which is being sanctioned, once the raw material, without raw material, project will not start. So moment the customer is giving the order, you have to supply within very short time. In fact, we have some example of GTRE, which is making that some of the components for aero engines. They have given the order and we have supplied in very short time. Number of things are there. Challenges are there now.
Sure. And to your earlier comment where you mentioned that now you have competitors who are doing all the products that Midhani is doing. So do you have companies which have started working on titanium alloys and super alloys? Because earlier, I guess it was only Midhani who was doing it in the country, even though it was a much smaller in volume compared to these steel. So do you have companies who are doing titanium alloys and super alloys now?
For super alloys, we have one and two companies already they have started. Maybe all grades they are not able to make, but some of the common grades they have started making. Started, I will say, there is a small beginning by them. Not fully full expertise is there. For titanium, yes, today we are the exclusive manufacturer. Nobody else has come up. But in certain area of titanium also, a company has started working in defense corridor of Uttar Pradesh. So they have started working now. So very shortly, probably there will be another next producer of titanium in the country.
Sure. And sir, are we still working on Astra missiles? Because that's been an order which has been placed recently.
Yeah, Astra, we have only all the materials supplied by Midhani only. And long back we have supplied for material for around 250 plus 250 around missiles. So right now when the order has been placed on BDL, definitely we are expecting that some of the orders will start flowing from them. So at present, whatever order they have got, it is a long time they have to supply. So for initial supply, all the material of Midhani is supplied in advance.
Okay. And sir, just lastly, what is the breakup of the revenue, 860 crores that we clocked broadly in terms of defense and, the space segment?
You are talking about the supplies made for this year?
Yes, FY22. The breakup of space.
FY22, I'll just mention here.
FY22, out of 860 crores, 45% to space. Okay. 21% to defense, 21% to PSU, that is also defense. Exports are around 10%. Others also is energy and others. So major share goes to space only as of now. But earlier it is 56% like this. Now it has come down to 45% because of slowdown of space launches.
And so because the new orders are coming more from defense, is it right to assume that next year, that is FY23 current year, the space orders will be far lower in terms of the sales?
Not far lower. But I expect that this whatever 45% you have seen, probably it will go to around 40 or 30, 35. In that range.
Same level of turnover is there. If my actual turnover goes up, the percentage will come.
This will come down. Yes.
Okay. Thank you, sir. All the very best to you. Thank you.
Thank you.
Thank you. I request all the participants, please restrict to 2 questions per participant. The next question is from the line of Anuj Sharma from M3 Investment Private Limited. Please go ahead.
Yeah, thank you. My question is just on...
Anuj, may I request you to speak a little louder, please?
Yeah, my question is an extension to the earlier participant. So of the 3,000 crore Astra order, what will be the size of opportunity for us?
Right now I cannot translate. We are having a number. But I expect that from there, Midhani may get around 250 to 300 crores, 250 crores around. More than 200 crores.
All right. So approximately 10% of total order value is our addressable opportunity. 8 to 10%.
Pardon?
Approximately 8 to 10% of the order value will be our opportunity size, correct?
Yeah, normally, yes.
All right. My second question is, we had signed a MOU with Lockheed Martin in Feb 2021, and we were expecting some revenues to flow into FY22. So could you just explain where are we in terms of this MOU and any progress in terms of financial milestones?
For Lockheed Martin, we have not signed MOU. It was only the MOA was there.
Okay.
That was not converted to MOU because we are discussing on 4-5 projects with them. And at the end of our discussion, it came out that they are basically interested in trying to get some technology transfer to us, not getting the business flow from the India. So that has not made us to progress much, because technology transfer as such for Midhani, we don't need the technology from the outside. We have already our in-house technology is fully totally mature. So unless we have the agreement where the technology, they can give technology and then they can buy the product also, then only it was possible to have some sort of a MOU. But that didn't click so far. So we are restricted to that level of discussion only.
All right. And my third and final question is, in defense, you are seeing a lot of usage of composites and carbon fibers, and we also plan to have tie-ups. Any progress on the carbon fiber tie-ups?
Yeah. We had recently, already we have frozen our DPR for carbon fiber, and shortly you will see that announcement will be made for setting up this facility. And this is being done with the support of NAL technology, which is our Indian technology, and Midhani and HAL both will be doing this work. And location has been almost decided, but I will not able to tell you at this juncture unless it is officially declared. But we have progressed a lot during this period.
All right. Thank you so much and wish you all the best.
Thank you. Thank you.
Thank you. Next question is from the line of Ronak Cheda from Warriga Capital Advisors. Please go ahead.
Hi, sir. Thanks for the opportunity. So my first question is on the space program. We are seeing the budget for the space program has not yet, scaled up in last 2 to 3 years. So what is your sense of the opportunity here from next 3 to 4 year perspective? How are you seeing?
Yeah, in fact, in space program, there is a shift in country's policy where India has decided to go for public-private participation. And now they are looking for investment by the private sector. So this is a time where they are trying to reconcile and see that how the private sector can participate. So recently for the 5 launches of PSLV, already the firms have given a bid, and I am sure already they have selected some sort of a consortium from the private and public participation, and then that is where the investment is coming up now. So you may not find their budget is increasing as far as that ISRO is concerned, but definitely investment will pick up. And now it is going for some sort of a commercial type of business, and that is because of that launches has to be done by the private sector now. Is going in the direction.
Sir, would it be fair to assume that our margins on the product would be similar irrespective of the customer?
This is very difficult because the customer margins are basically decided by what type of orders you are getting. If you see the commodity steel, if you are trading in that, margin will be very less. If you are trading in a very high-end material, margin will be higher. So Midhani has the majority of our orders are from the high-end materials only. But there also for high-end steels or high-end materials or alloys, there are a lot of suppliers coming up in the country, So definitely there will be a pressure on the margin in the future. But as I said in the earlier, that our Midhani technology is so versatile that if we can able to improve our operational efficiency, we will get a good margin.
Thank you. Ladies and gentlemen, we'll take that as the last question. I now hand the conference over to Dr. Sanjay Kumar Jha for closing comments.
Yeah, I'll say that this interaction has been quite satisfactory, very nice. All the participants have put very apt questions and queries, and I was very happy to answer. And some of the things which we could not answer, you can take it from our financial results and other data. But we are very fortunate to have all of you who are a stakeholder in our company. And I can also tell you that this company has a great potential in the future, because some of the products which we are developing for which we cannot put in the public domain, for strategic applications, have a good potential as our defense manufacturing has picked up. So that is the aspect which we are having. So we hope that our progress will be very good in the future. So, and once again, I thank you all for this study. I don't have any other information to give here, but I can only say that your company is one of the biggest advantages, that the knowledge base is excellent. We have a very good team for R&D and innovation, and I think that is the driving strength for us and having an edge over our competitors. Thank you. Thank you very much.
Thank you very much. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.